Hello and welcome to today's edition of Route 664, The Road to Human Kindness. I'm Les Winston, and I am the spokesman for the best organization in the world today, one that's really needed so drastically, the Endow America Network Foundation. We want to endow America. We want to make America change from being in debt to endowed, and that means moving around a lot of money. There's a tremendous wealth transfer that's going on, and this is an opportunity for a lot of people to get the part of that wealth transfer that's important to them. Government's looking for a lot of it in the form of taxes when they can. Your heirs are looking for a part of it when they can get it. And then we'd like to see you be philanthropic and give part of it to charity. We think that's a really important part of the process going forward. The charitable sector is best served when you can create large gifts painlessly. And that's what sections of the tax code we discuss here on Route 664. Route 664 is 664 because of Section 664 of the tax code, which allows you to do some amazing things. Congress gave that to us in 1969. Unfortunately, not enough people are using it, but it's a way for you to create lower taxes for yourself, increase the amount of income that you have to retire on it later in life, and you can also do something wonderful for the community when you pass. All of those things are included in that process of 664. We've actually created the theory of social charity. Social charity is where you take 664 and you create endowment squared, an endowment for yourself and an endowment that you'll leave behind. And that's really powerful planning tools. Those are powerful planning tools that most people are not aware of. So we want to make you aware of those, and we've created an academy where you can learn about it. The Discovery 664 Academy is a place for you to go to learn how to use this section and these sections of the tax code that we call social charity to your advantage. One of the things that is very powerful about these sections is they help you reduce your taxes. And taxes are in everybody's mind at most parts of the year, but certainly in April when they have to do their tax returns and it becomes a real factor. But taxes are important to know about at all times of the year. My guest today is Scott Hodge, and Scott is a guru in the tax arena. How are you, Scott?
I'm doing great. Thank you very much.
Good to have you with us today. A lot's going to happen in the end of 2025 when this tax mix ends. Is it really transparent what the government does when they're working with taxes and explaining or working in the tax area that you're going to have to pay?
Sadly, Les, Congress is anything but transparent when it comes to tax policy. And it's really unfortunate because one of the core principles of sound tax policy is stability, meaning tax code shouldn't change a lot so that you and I can predict or plan our lives, our business lives, our personal lives around that stability in the tax code. But over the last many decades, the tax code has changed dramatically in some cases from year to year, decade to decade. And in 2017, Congress passed a really big tax cut for individuals and for businesses. But because of some rather quirks in congressional budget rules,
Mhm.
they sunset a large portion of those tax cuts to go away after 10 years, and that would be after next year. Most of the individual tax cuts that were in that 2017 Tax Cuts and Jobs Act will then begin to expire as of December 31st of next year, which puts Congress in a real dilemma. What does it do? If it does nothing, all Americans will be hit with about a $4 trillion tax increase if they do nothing. If they do something and try to extend those tax cuts, then they have to think about the deficit consequences of that. They
Mhm.
have to try to figure out how do they offset some of that impact to the deficit with changes elsewhere so that you don't increase the deficit. Really, really big decisions, but a really important impact on you and I as we try to think through our daily lives, our business planning. And of course, for those of you who are planning your estates, these are really big and challenging changes.
So it's a political football.
Very much so.
If one team gets the football, it's one way, and if another team gets the football, it's another way.
That's a good way of putting it, certainly.
So what are the differences between the two teams?
Yeah, well, let me first go into some of the details of what is expected to happen next year. We're going to see individual tax rates go up. So, for instance, the top rate currently is 37%. That would go up to 39.6%. The standard deduction, which was expanded considerably in the 2017 law, that will be scaled back dramatically, which means currently about 90% of Americans they don't have to itemize their deductions. They get to basically file a short form
Mhm.
because their standard deduction is so low or so high. So that's really simplified things for millions of Americans. That'll go away. And then they'll face a complicated tax code again. The child tax credit, for instance, which is currently $2,000, that'll automatically go back to $1,000. There are other changes like the state and local tax deduction, which was capped at $10,000.
Mhm.
Well, that'll be lifted. But on the other hand, things like the alternative minimum tax and what was called the PEAS provision, which scaled back your itemized deductions, those will come back into force. So there are all these moving parts that'll happen simply at the stroke of midnight on December 31st of next year.
And
So we're,
that's just going to happen. And then what happens? The next administration decides
yep.
we want to go back to that. We want to change that to something greater, something smaller. That's what happens. And then you got to go through Congress and they got to
Exactly.
legislate.
That's exactly right. And so this is going to be a big debate over the next, almost 18 months as
Mhm.
Congress tries to figure out what to do. And as you intonated, the November election plays a big part in that. Now, currently, the Biden administration has signaled that it would allow many of those tax cuts to expire, especially for those people with incomes above $400,000 a year. And so by default, then they would allow those tax cuts to continue for those making under 400,000 a year.
So it's why is $400,000 a target? I could never understand that. How did they get what 400,000? What is
I don't
that?
know. I don't know if you remember Obama used to talk about 250,000. And
Yeah.
now I think maybe inflation raised that to 400,000.
Okay.
Who knows?
Well,
It's really arbitrary,
yeah.
obviously.
It said that if you want more of something, you tax it less, and if you want less of something, you tax it more. Now, how
That's
does that play into this? It seems to me that if the government wants to raise taxes on corporate entities, that means they're encouraging corporations to make less profit.
Yeah, that's exactly right. When it comes to the corporate tax, and we didn't really talk about that, the Tax Cuts and Jobs Act lowered dramatically our top corporate income tax from 35%, which at
Mhm.
that time was the highest corporate tax rate in the industrialized world. And it lowered that to 21%, which puts us back into sort of a competitive mix when we look at it from a global perspective. And that had a big impact on increasing U.S. competitiveness. A lot of companies started moving some of their activities back home because it was more productive and competitive to do it here. They moved intellectual property, for instance, from abroad to here because it was more tax advantage to do that.
Mhm.
But if you were to raise the corporate tax rate, as Biden has promised to do, and by default, Kamala Harris has promised to do, it would have a big impact on reversing that. The U.S. again would have a very uncompetitive corporate tax. You and I would begin to pay more, either for the products that we buy, because consumers bear some of that cost of the corporate tax, but workers would be the most impacted because companies have a choice. I mean, if the cost of inputs for a product go up, well, businesses have a choice. They can cut costs somewhere else or pay the higher price. And sometimes where they cut those costs is with labor. And
Yeah.
what we've found is that higher corporate taxes end up falling most impactful on workers through lower wages. And especially what we call marginal workers, like women, low skilled workers, and younger workers, would be most impacted with the loss of those jobs.
So if unemployment, I mean, the whole thing is a little bit bizarre in my just the way I look at things from the standpoint of logic and reasoning.
Yeah.
It seems to me, I mean, well, they want to collect, if the government wants to collect more money from you, why do they need to collect more money from you? Why does the government need to collect more money from you? What is the purpose of the government collecting more money? I
Is to
can't,
pay
I'd
for
like
the,
to,
yeah,
I'd like
the
you to
idea
answer
here
that
is,
question, Scott, and I want to know what it is right now.
yes, of course. Well, obviously, our taxes go to pay for government, whether we like it or not, and
Yeah.
whether we like how it's spent or not. And so there's always this tug and pull from lawmakers to want more taxes so that they can spend more.
But why are they having such a difficult time with spending?
Yeah.
It seems to me that they have a really bad problem. They are what I would consider the giddy consumers. For whatever reason, they're buying things, but they're not supposed to be buying things. Why is the government buying things? It's like one of the prime examples that I have the biggest problem with is they are contributing to non-governmental organizations.
Yep.
If you're paying taxes to them and they're contributing to non-governmental organizations, and you could contribute to non-governmental organizations and not pay them the tax, why
Right.
isn't that better?
Well, I think that's a legitimate question, and I think it's the kind of thing that Congress ought to be investigating and paring back on. There's just simply too much spending that goes on for things that are obsolete, programs that were created during the Depression or the Great Society that really aren't needed anymore and have outlived their usefulness, and yet Congress never goes back to review these programs and said, well, do we need this anymore? I mean, it was solving a problem during the 1930s. Is it really relevant today? We ought to do more of that and have that continual effort to look back and make big decisions about whether some of these programs are useful or not, or wasteful or not. And that doesn't go on because the incentive process here in Washington is for new stuff. It's to create new programs to solve today's problems. And they never go back and look at the kind of programs that they've created in the past and try to get rid of them so that there's more room for the new stuff. And this is the way it goes. And so what you get is these, what I call sort of sedimentary layers of government that build up over time. And that's why we end up getting the deficits and the debt that we have today, is because so much of what we're paying in taxes and borrowing money to pay for is to pay for old government, not just the new government.
So they were very wise in 1969. I don't know, maybe that was a year of an epiphany of some type that
It was my 10th birthday that year.
There's been a lot of wars in between.
Maybe that was the reason why.
Right.
But I know, Lyndon Johnson had just completed the Great Society, and he was creating a lot of programs that were going to be government funded. And I always say that in their infinite wisdom, they could see the demographics of the country going forward, and they said, "Hey, wait a minute, we're not going to be able to do this forever. We got to have a way of changing that." And so they wanted to build a charitable sector. That's why they created these sections of the code. I mean, they say, if you do something for charity when you die, we'll give you lower taxes when you're alive. That was the bargain that they made in these sections, and nobody uses them. Nobody's aware of them. They created it, and then they don't tell anybody about it. It's like the best kept secret. That was great thinking. That was really logical thinking. And when I talk to my folks, I'm saying, hey, you're paying a lot of tax. You're not getting the services that you want. You could help your own community if you do this directly.
Right.
Let's not. We don't want to starve the government, but we certainly have the right to reduce the amount that we pay them. Why aren't we doing that?
Well, because there's so much demand on our income through taxes that there isn't a lot of room sometimes for charitable giving or doing other things. I've been doing a lot of work looking at the history of the charitable deduction, for instance, and there isn't a lot of relationship between the size of the charitable deduction or the number of people who take it and the amount of charitable giving. Where there is a relationship is between the health of the economy and after-tax incomes. So the more that we can do to simplify the tax code and lower tax rates so that people have higher after-tax incomes and a more prosperous economy, the more people are willing to do things charitably. And for instance, we're discouraging savings, for instance. And one of the things that, your vehicles do is encourage people to save. Mm-hmm. And yet we have a really complex savings system in the United States, where we have a 401k, and then we've got 529 plans, and we've got all these other things that make us take a dollar bill and cut it up into all these pieces that Congress wants us to do and try to save it in all the. Wait a minute, why? Maybe we should simplify the way in which we allow people to save so that they do more of it. They have more after-tax incomes. That leads to a more prosperous society. And then the kind of plans that you're advocating have more teeth in them. They have more meaning because people have more in which they're able to give charitably.
Yes, I hope, and I echo your sentiments exactly. We think that that's the thing you want to have go forward. Yes. I guess it's Scott Hodge, and Scott is with the Tax Foundation, which is also a nonprofit organization, which you can support with contributions.
Yep.
And can be seen online. I'm sure it'll be on our Chiron when we play this interview. And my opportunity to speak to people who have your knowledge is limited because most people don't. Yeah, what I got to tell you, it's anecdotal. We've created a new profession called endowment engineers. Endowment engineers are people who work with the tax code, with these sections of the tax code, to help people create an endowment for themselves and an endowment that they pass on. So the endowment engineering process is one where we create blueprints for people to do this. So I had a conversation with my wife, and she said to me, "Well, what right do you have to tell people how they, what authority do you have? Well, who's saying you could do that?" So I was thinking about that. I said, because the IRS allows you to become a tax preparer. Mm-hmm. And I don't know if you're familiar with the process of becoming a tax preparer, but I was kind of astounded. You would think that if somebody has a right to help you with your tax preparation, tax return preparation, that they got to have some education, skill, blah, blah. The only thing you have to know how to do is do your own tax return.
Right.
And you become a tax preparer.
Yeah.
So taxes, they're not funny. They're not comic relief for anybody.
No.
But people don't pay attention to them. Why?
Well, there's a lot of what we call tax illiteracy, and it goes along with economic illiteracy. And in part, the tax code is so complicated. I mean, you were mentioning at the outset, no one knows about, what is it, 664? Look, I'm an economist. I'm not a practitioner, so I don't know all the tax provisions myself. And so, the common person is looking at the tax code and trying to do their taxes and saying, oh, this is why I pay someone else to do it. Interestingly enough, a few years ago, Congress did the right thing for once in simplifying the tax code. They eliminated a $4,000 tax deduction for higher education expenses. Mm-hmm. And they really go, what? Really? Why would they do that? Well, because people were confused by it. See, many people were taking a $4,000 tax deduction rather than a very similar $2,000 tax credit. And tax credits reduce your tax liability dollar for dollar, whereas tax deductions just lower your taxable income. So for most people, a tax credit is much more powerful in reducing their taxes. But people got confused by it and were taking that thing they thought was more valuable but wasn't. Congress finally got rid of it. This is the essential problem in our tax code. It's so complicated that people get confused by it and do the wrong thing, or they just give up and they have someone else to do it for them.
How do we change, and this is a third rail for a lot of politicians. You're not a politician, so I'll ask it. But how do we change Social Security? How do we change Medicare? How do we change these entitlement programs to make sure that they're going to exist and still maintain a reasonable tax world?
Yeah, that's a big question that faces us actually within about a decade, less. Both Social Security and Medicare have, well, they're in serious financial trouble. Currently, both of those programs are actually spending more than the tax dollars that are coming in to pay for them. But what's keeping them sort of, at least on paper, afloat is the trust funds that are out there, and these are kind of on paper trust funds that are drawing down some of the excesses that they've had over the years, and those will expire or go bankrupt effectively within about 10 years. So Congress ought to be dealing with this now to figure out how to keep those programs afloat. There are three choices: borrow more, which is what they've been doing,
Right.
tax more, which we've done before and has limited effectiveness, or change the programs to make them more cost effective and more stable.
To pay
That's
less, to actually pay less.
yeah, but
Pay less income to the recipient.
yeah, and for Social Security, for instance, one of the things you could do is create more incentives for people to, instead of giving their payroll taxes to government, allow them to invest some of that so they can take advantage of market forces and have a real nest egg for themselves when they retire, and not just rely on payments from the government. That's the right thing.
I have that solution already.
That's right.
That's a 664 trust.
Solution.
It's a 664 trust, and a 664 trust allows you to put money into it for your entire lifetime and get income at the end of the day. And you can put in as much as you want to grow it as big as you want. You can even put in non-cash assets and save taxes when you do it and grow it to be a monstrous thing so you can have a tremendous amount of income at the end of the day. And that is available to you right now. I'm trying to figure a way to get young people to start that. We were actually, our part of our white paper has been that we think young people, 18-year-olds, should serve the country for 2 years. I think that whether they're male or female, I mean, males already have to sign up for at age 18, but females don't. I think if you get young people, they need to serve the country. Not necessarily as military, they need to go through a boot camp, but maybe they can satisfy 2 years of college with it. Maybe they can, but they're getting paid, they're becoming independent, they're outside the scope of their, they're being actually evaluated by somebody else to see how good they are. The Israelis have been doing this for forever. And then they could start their own program right then, where the government says, okay, you guys are going to be on Social Security, and you don't have to invest in the Social Security. And we'll start it at age 18, and we'll gradually grow this into. What do you think of that idea?
I think we need to move away from a wealth transfer program to a wealth creation program. And what you're talking about is right on target. Because right now, you and I or anybody in the workforce is paying about 12% of our income to go to pay for someone else's retirement, because that's the way Social Security works. Current workers pay for the costs of today's retirees. There's no bank account out there that you've put into that has been saved for your retirement. Sorry, folks, that's exactly how it works. And instead of having that sort of wealth transfer from one generation to the next, we need a wealth creation program where people have real wealth when they retire, real wealth and real assets when they die, so that they can transfer that to the next generation. And you have intergenerational wealth transfer, which then makes everybody better off and more prosperous. And it's really sad. I think it's immoral that today someone can pass away at age 60, having worked for 40 some years, paying into Social Security, and then have nothing but survivor benefits as a result.
Or $255 to bury yourself.
Isn't that tragic? I mean, think about that.
Yeah,
Instead, we need a program that allows people to build that wealth, to have that nest egg, not only for themselves, for the next generation. And
hopefully young people
we have
a
wealth transfer program.
Young people need to be educated, and they need to start to think that way. My guest is Scott Hodge of the Tax Foundation, and a bona fide guru in the area of tax and the knowledge of what the problems are with tax. We're not sure. My mother loved taxes. She thought that paying the government was the greatest thing, and never forgave her for that. But that's what we have sometimes. Anyway, Scott, thanks for joining us today on Route 664, the road to human kindness. And, if you reduce your tax, you can get to the end result much faster. So Scott is doing the right stuff with the Tax Foundation, doing the research to find out ways to do it better. But hopefully you communicate that to the legislators that will get something that's worthwhile.
We're trying to raise their tax IQ as much as possible. And with members of Congress, that's pretty hard.
Okay, thanks, Scott. On that
You bet.
Thanks again, folks, for joining us on Route 664, the road to human kindness, and Route 664, the road to human kindness. And you can now participate in the Discovery 664 Academy. It is up and running online. There are 4 courses there right now that you can take for free. The first one is how to deal with appreciated stock, how to deal with lowering your tax bracket, how to sell commercial real estate, an alternative to selling commercial real estate, and also how to deal with retained earnings in a C corporation. There's a test with each one of them. If you're brave enough to take the test and we're interested whether you can pass it or not, that means that we're doing a good job teaching. And also, if you do pass, you may be a candidate to become an endowment engineer, because this stuff is complicated, but you can learn it, and hopefully we can teach you in a way that you can utilize it to help other people. Don't forget to tune into Route 664 Radio, and you can hear these conversations that we have with important people like Scott Hodge on various topics that concern the financial world, the financial literacy world, and also the world of charity and philanthropy. And don't forget to pick up Wanda Miles' great book, Socials to Charity. That is on the, you can go to Amazon and get that, and you'll find the information on our website also. You can find us on endowamerica.com, endowamerica.com. Thank you, Wanda.
Thank you.
Yeah, thank you. And that's the show for today, folks. See you again next week.
Our protagonist, Jack, was a 65-year-old retiree who'd always been known for his offbeat sense of humor and love for numbers. He'd been searching for a way to support his community while securing his retirement income. One day, while browsing through the depths of the internet, Jack stumbled upon an article about Tax Code 664 and its potential benefits for charitable planning.
Hello, welcome to today's edition of Route 664, the road to human kindness.
Curious and excited, Jack decided to delve further into this mysterious code. He spent hours poring over tax law books and articles until he became a self-proclaimed expert on the subject. He'd tell his friends, "Who needs Sudoku when you've got tax codes to crack?" Armed with his newfound knowledge, Jack approached his financial advisor, Martha, and shared his idea of utilizing Tax Code 664 to set up a charitable trust. He was convinced that this strategy would benefit not only his retirement, but also his beloved community, particularly the revitalization of the local park. With a twinkle in her eye, Martha acknowledged Jack's enthusiasm and praised his resourcefulness. Together, they devised a plan to establish a charitable trust that provided Jack with a stable retirement income and directed the remaining funds towards renovating the park. Word of Jack's innovative approach spread like wildfire, inspiring others in the community to explore the potential of Tax Code 664. Soon, more and more people began implementing charitable planning strategies to support various community projects, ranging from building a new animal shelter to establishing a local art center. As Jack took his daily strolls through the newly renovated park, he couldn't help but smile. His Tax Code 664 adventure had not only secured his retirement, but also transformed the community in more ways than he could have ever imagined. With a wink and a grin, Jack would often say, "Looks like the joke's on boring retirement plans." Who knew tax codes could be so much fun? Who? Remember, your financial journey can be both impactful and entertaining when you explore the potential of charitable planning with Tax Code 664. Visit endowamerica.com. With the right knowledge and guidance, anyone can turn their dreams into a reality. Leave a lasting legacy that benefits generations to come. endowamerica.com. Plan, prosper, pass on. The power of 664.